welcome to the Interaxis channel and Interaxis.io. Today we want to talk about a question that we've been getting quite a lot lately, which is, am I too late? Am I too late to invest in Bitcoin? This is a big question we've gotten, especially with the run in Bitcoin lately. We finally passed $20,000 again in Bitcoin price, and then we shot up to $25,000, $30,000, and even above $40,000 as of today. So the question is, am I too late? Is it even worth putting my money in Bitcoin? Should I wait for a pullback? So we wanted to address this. First, we want to remind you, if you're watching this on YouTube, please subscribe to the channel. Please visit us on Twitter at Interaxis8. Check out our website. Now, the question, am I too late to invest in Bitcoin? The quick answer is, it depends. It depends on what you're looking for. If you're trying to get those 100x, 1000x returns, those people who were mining Bitcoin on some gaming PC back in 2011 and 2012 and have hundreds of Bitcoin sitting there that they mined for a few cents and now they're worth $40,000, yeah, you're a bit late for that. Mining now is a very, very, very expensive proposition that people are throwing hundreds of millions, if not billions of dollars into. You're also late to go, obviously, buy Bitcoin for $2 and watch it run up. That being said, if you bought Bitcoin for $2, you were probably pretty happy to sell out for $100. So now we want to talk about, am I too late to invest in it all? Am I too late to see some growth? And am I too late to see some help, some allocation within my portfolio? So we'll talk a little bit about those things. First, remember, we're not giving any price targets. We're not telling you to buy. We're not giving any investment advice here. We're just talking about the facts and what's going on out there. So first things we're going to talk about, we've talked in previous videos about where Bitcoin derives some of its value. And of course, some of that is as a what we call an inflation hedge or a store of value. Now, again, past stores of value or inflation hedges in the past have really been gold, and for several years has been the US dollar. The US dollar has maintained its value relative to goods and services around the world and has increased its value relative to other currencies around the world. So the dollar has been a store. You can keep money in the bank and it means your purchasing power is still there. You can have assets that are denoted in dollars in the past and your purchasing power is still there. Gold recently has gone up quite a bit in value as the US and other countries have started to print more money, have started to create more money out of thin air. Then value of scarce assets like gold and now Bitcoin tend to go up, tend to increase, because people need a place to hold their money, not hold their money, but hold their value, hold their purchasing power, and that's what's important here. Something to note about Bitcoin, above many other stores of value, is people tend to be long-term holders, or as they call themselves, hodlers. They want to hold it forever. They're not in it to trade. A lot of times there are traders. There are people who trade it in and out, and they're looking for short-term moves up and down. And that is what really drove the price to near 20,000 back at the end of 2017. Now what we're seeing is institutions. We're seeing people who finally see it as the inflation hedge, as a store of value, and they're willing to hold it for the very long term. What that means is, if all those people are holding hundreds of millions of dollars worth of Bitcoin, there are not as many left. So what we see is, we know that the supply of Bitcoin will only ever be 21 million in the world. We're producing them at an average of 6.25 per block. 6.25 Bitcoin are being produced per block. That's about every 10 minutes. Okay, the demand for more Bitcoin is much, much greater than what is being supplied into the market. There are fund companies like Grayscale that have to buy so much Bitcoin to fund what their investors have already put in, to fund the dollars that their investors have already put in. And they're buying up so much Bitcoin. Then you have people like Michael Saylor at MicroStrategy that is just buying up Bitcoin. And he's got to get it from somewhere. And if a lot of the institutional holders are not willing to sell theirs, they got to find it from somewhere. We're not creating enough of it. The code says we can't speed up creation. We can't create more Bitcoin. Therefore, it seems like the value of Bitcoin should continue to increase. So if you're just saying, can I invest now and see my value go up? It seems from the stats, it seems from the data, like that should happen. On top of that, now you're starting to get the big banks come in with their price targets. So JP Morgan just a couple weeks ago, over $140,000 long-term price target on Bitcoin. This is saying that Bitcoin is starting to replace gold as a store of value. Okay, Gen X and millennials are starting to see Bitcoin as an easier way to store value than gold is. And those Gen X and millennials are the ones who stand to inherit over $68 trillion in value. They're the ones getting into the prime earning years. And so what we're seeing is potentially Bitcoin could replace gold. Now, where do we fit on that? Okay, $9 trillion. That's the gold market cap. Bitcoin, as of this morning, is about $756 billion. Okay, that's less than 8.5%. Okay, so if we think Bitcoin is going to rise in terms of overall store of value market cap in relation to gold, and we see this percentage going up, then the value of Bitcoin has to go up because we're not printing that many more of them. There's only ever going to be 21 million. So this is where we see that you might continue to see growth in the value of Bitcoin. Again, we're not saying this is going to happen, but this is what the data is showing us. Okay, Citi earlier this year, Citibank, an analyst there, came out with over a $300,000 price target. This is based on some technical analysis, so we're not sure how that's going to work, but there's another price target from a major bank. Now, you are also starting to see more and more institutions get in. Of course, when a public company like MicroStrategy has bought over $1 billion worth of Bitcoin, you're going to see more and more companies denote some of their corporate treasury to Bitcoin. And again, a lot of people aren't selling it. It's just somewhat that they're buyers, and so those buyers are having to pay higher and higher prices. You saw earlier this year, just a few weeks ago, MassMutual, a major mutual insurance company, got in with a $100 million buy of Bitcoin. We're probably going to see that happen more. And MassMutual is a different animal because they're having to protect the future insurance claims for their company. So that's a big deal when a mutual insurance company starts seeing Bitcoin as the inflation hedge, as the store of value, because what they're trying to protect against is the future insurance claims of their policyholders. So that's a big one. You're going to see more and more companies like that, insurance companies and institutional investors that are starting to be okay with this. But again, if the stock, and there's something called the stock to flow meter, the stock to flow ratio, which talks about how much more Bitcoin or how much more of a commodity or an asset is coming into existence versus how much is demanded. And we see that Bitcoin is not producing all that much more every hour, every day, every year in relation to the demand, which means the price or the value should continue to go up. Other things to look at for this year are there might be an ETF that's finally approved. Okay, and a Bitcoin ETF would cause a huge spike in demand for Bitcoin. In addition, what we're starting to see is more financial advisors get involved helping their clients purchase Bitcoin. All right, so what we're seeing is the potential for so much more demand with a limited supply. That means the value should go up. Now, if the question is, am I too late to have it as part of my portfolio? There are other reasons to have Bitcoin that is not just, I want the value to go up 2, 3, 4, 5x. There's value to Bitcoin in its volatility, right? Now, part of the value, and we've iterated this before, is in the volatility of Bitcoin. And that volatility is important as part of a portfolio and allocation, that you rebalance regularly. So if the value of Bitcoin, if you have some 5% Bitcoin in your portfolio and it goes up tremendously in value, you get to next quarter when you rebalance, take some of that off the table and move that into other assets, into your other equities or fixed income or something. Take some of that off the table, and the next quarter maybe your equities are up more and Bitcoin is down and you go buy some Bitcoin. So Bitcoin still has that volatility aspect to it that allows it to be a viable part of a portfolio that is rebalanced regularly. So if the question again is, am I too late? The volatility of Bitcoin makes it to where you're never really too late. As long as it maintains that volatility, it can be a vital part of any portfolio, regardless of whether the value is going up or down tremendously. Now, of course, if you buy a bunch of Bitcoin and it shoots down tremendously, the volatility didn't really help you there. You have to assume that it's still going to maintain some level of value. So again, the question, am I too late? There are so many reasons we see that you're really not too late if you want to be able to participate in some very good returns on Bitcoin, especially when we see all the currency that's being printed, all the dollars and other fiat currencies that are being printed, with a new administration in the U.S. that seems to be okay with generating even more money, with creating more money to be able to give out more government programs, more spending. They're going to have to print more money because they're not going to have more tax revenue coming in necessarily. So there's just going to be more dollars, same amount of Bitcoin. The value of Bitcoin, gold should go up, and the fact that the value that more people are starting to choose Bitcoin over gold says that maybe the value of Bitcoin will just continue to rise. Again, JP Morgan says over 140,000, Citi says over 300,000. There are all these other long-term price targets of people that are not necessarily hardcore Bitcoin people. Of course, there are the hardcore Bitcoin crypto enthusiasts that are going to tell you $300,000, $500,000, $1 million, which might happen at some point. But what we look at is when the investment banks, when the big banks start putting these big price targets, we go, maybe that's a little bit more realistic. So again, the question, am I too late to invest in Bitcoin? The answer is, as long as you get educated, as long as you know where it fits in your portfolio and you're taking your risk into account, hopefully you're working with a financial advisor that's starting to understand this, you're really not too late. You've missed out on the 100x maybe or the 1000x, but you still have the opportunity to have some good value, some good gains investing in Bitcoin and cryptocurrency. And once you really learn Bitcoin and you start to get into cryptocurrency and decentralized finance, it's amazing what you'll learn and open up, and you'll be prepared for the next generation of investments and the next generation of financial opportunities. So hope you enjoyed the video. Please subscribe to the channel. Visit us on Twitter at Interaxis8, the website Interaxis.io, and we'll see you in the next video.